Assalamu alaikum friends, welcome to today's standard. Today's standard is IFRS segment reporting. This has not been taught in financial reporting, so this is a new topic area for SBR students. And this is also a question you can expect, right? I would say that there are 60% chances that you might get an IFRS 8. But please, again, I would say don't go by my expectation. I'm just expecting that this might come up. But that does not mean that you should study this more or you should not study this more because I say expectations are low or high. So don't go by that. You definitely need to study the entire syllabus. So in IFRS 8, we first need to define what are reportable segments. And then we need to disclose those segmental information. And also there are some problem areas. So we are going to go through these three areas we are going to cover here. Okay. Segmental reports are designed to reveal significant information that might otherwise be hidden by the process of presenting a single statement of profit or loss and other comprehensive income and statement of financial position for an entity. Right? Why segment reports we present? What is the use of IFRS 8? See, sometimes it's not, we don't get the information which we might need just looking at the single statement of profit or loss and financial statement. Why? Because in a statement of profit and loss, you are given a revenue, but that is just one single revenue figure. We don't know how that revenue we got. It compromises of maybe so many major customers or in what location. If we want to see, for example, we might want to know where that revenue comes from, which location, where are our major customers located, who are our major customers, what are the percentages of revenue we are getting from each location. If you want to know such information, you need segment reports. You just cannot decide looking at one statement of profit and loss. That's why segment report IFRS is very useful because it divides it in segments. So now let us see what is operating segment. What is the definition of operating segment? They require certain entities to see, only certain entities are required to do that. Okay, if you see under SME, small and medium enterprise, they are not required to. For them, IFRS 8 it is not there because they are not required to disclose segments. Segment comes for big organizations. Okay, so certain entities it is required that to disclose information about each of its operating segments. That will enable users of the financial statements to evaluate the nature and the financial effects of the business activity. So IFRS 8 applies to entities which trade debt or equity instruments in public market. Very big organizations. Okay. So an operating segment is defined as a component of an entity that engages in, you need to know all these definitions. That's for sure. If you have to recognize a segment, whether it will be under operating segment or not, it needs to meet the definition of these three. Not all segments are operating segments. So that operating segment is that which engages in business activity from which it may earn revenue and incur expenses. So the word is it should earn revenue and expenses from that business activity. Whose operating results are regularly reviewed by entity's chief operating decision maker to make decisions about resources to be allocated to the segment and assess its performance. So the operating results, this will be regularly reviewed by the chief operating decision maker. This is the second thing which has to be there. Third, for which discrete financial information is available. Financial information is available for that segment. Discrete financial information. So if these three are there, then it is known as an operating segment. And how to define reportable segments? Under IFRS 8, an operating segment is a component whose results are regularly reviewed by entity's chief operating decision maker. Right? We know that. This means that the segments reported in the financial statement should be the same as those reviewed in internal management reports. Okay. Management may use more than one set of segment information. For example, they might analyze information by classes of business, different products or services, and also by geographical areas. If this is the case, then management must identify a single set of components on which to base the segment disclosure. The basis of reporting information should be the one that best enables users to understand the business. That means, are you going by the geographical area? Are you going by the different product? How are you segmenting it? whatever the way you are segmenting it, it should be one way. You cannot say, okay, product also, service also, geographical areas also. In which you are basing your segment disclosure, that should be a single set of components. So the basis of reporting information should be the one that, so how do you report the information? Based on the one, for example, if you think the product might be a better way, if I segment according to product, that would be better because users can understand the business better in that way, or according to geographical area, according to service. So you have to decide on that, whichever best enables users to understand the business and the environment in which it operates. Not every part of an entity is necessary in an operating segment, right? Not every part or part of an operating segment. So some examples are given to you which are not operating segment. One is corporate headquarters. This is, you cannot say he's an operating segment because you don't get revenue, you don't earn losses through corporate headquarters, and their results are not reviewed by operating decision maker, chief operating decision maker. This three you have to see. The first, the second, and the third. And other similar departments do not earn revenues and therefore not operating. So they do not earn revenue, they cannot be called operating segments. Even similar departments to corporate headquarters. An entity's pension plan is not an operating segment. You see, even the pension plan is not an operating segment because we don't earn revenue from that. The holding pension plan aggregation. You need to know when to aggregate and when to disaggregate. IFRS 8 says that two or more operating segments. You see, two or more, and both has to be operating segments, by the way. It's not that one is not operating segment, the other one is operating segment, and then you are aggregating. No. Two or more operating segments. They can be aggregated and reported as a single operating segment, provided that they have a similar economic characteristics. The characteristics has to be similar. And also they have to be similar in this respect. Product and services are similar, or the production process, classes of customer, or distribution methods. Okay. So test understanding definitely will do after we complete IFRS 8 completely. Now we are going to the quantitative threshold. This is a very important area. You need to memorize it. So entity must separately report information about an operating segment that meets any of the following quantitative threshold. If it means this quantitative threshold, you need to disclose separately. You don't aggregate it. What is it? First, we are talking about in terms of revenue. Then we are talking about profit or loss. Then we are talking about assets. So these three areas. It's a reported revenue including both sales to external customers and inter-segment sales. Please understand. The sale to external customer, that sale includes that revenues from both to the external customer and also to the inter-segment. For example, you are selling within segment. Let's say you have 5 segments and each segment is selling among themselves. That revenue also you have to add with your external customers revenue. Is 10% or more of the combined revenue of all the operating segment. It has to be 10% or more. Of what? Combined revenue of all the operating segment, whatever the revenue is. For on that you have to see whether it is 10% or more. The revenue which is recorded for external customers and intersegment sales. We'll definitely do a question on this. This is very easy. This is the easiest thing. If you get IFRS, you'll be very lucky. Next, reported profit or loss is 10% or more of the greater. What do you mean of the greater? Greater in absolute amount of. If it is the profit or the loss, you have to see which one is greater out of it. So the combined reported profit of all operating segments that did not report a loss. When you are having a profit, you only have to add those segments, the operating segments which are reporting only profit. You don't take the segments which are reporting loss. But when you're taking for the loss, the combined reported loss, all operating segments that reported a loss. So you are separating it. profit and loss, and sync whichever is greater on that 10% or more. Next, if assets are 10% or more, so the one easy thing is everything is 10% or more, whether it is asset, whether it is profit or loss, or whether it is revenue. So this is one of the easiest things for you to remember. 10% or more of the combined assets. You combine all the assets of all operating segments and see whether the asset is 10% or more or not for that segment. Now, at least 75% of the entity's external revenue must be included in reportable segments. At least 75%. This is external revenue only. They didn't include intersegment revenue. This must be included in reportable segments. Other segments should be identified as reportable segment until 75% of external revenue is reported. That means if the other segments does not meet the 75% threshold, what should you do? You start combining all the small segments until they make up the 75% of external revenue. Understanding? So information about other business activities and operating segments that are not reportable. Okay. What about the operating segments that are not reportable? Not every operating segments are reportable. If it is not reportable, they are combined into all other segment category. That means they are not disclosed separately. Okay, this is it. All together are put under one category. It is known as all other segments because they are not reportable. Okay, so this is a very good question to identify that. According to IFRS, which segment must be reported? So we have so many segments: Europe, Middle East, Asia, North America, Central America, South America. We'll do this question at the end. Now let us go through this. Disclosing reportable segments. So general information. You need to disclose the factors used to identify the reportable segments and the types of products and services sold by each reportable segment. What about information about profit or loss? A measure of profit or loss, a measure of total assets. You need to disclose. Other information should be disclosed if regularly provided to the chief operating decision maker. If you're giving some information to be reviewed by the chief operating decision maker, you need to disclose that as well. Now, IFRS 8 requires segmental reports to be based on the information reported to and used by management. So the segmental report, how do you make the segmental reports? It is based on the information that you give to your management. Even when this is prepared on a different basis from the rest of the financial statements. Therefore, an entity must provide explanations of the measurement of segment profit or loss, segment assets, and segment liability. You have to explain. Example of a segmental report. So this is an example. This is how a segmental report looks like. 3 segments you have on all other. That means other segments are put under here. You have revenue from external customers, revenue from inter-segment transactions. You see it is separated. The inter-segment revenue and the external customers revenue. Then we have interest income, interest expense, depreciation, exceptional cost, segment profit. We have segment assets and we have segment liabilities also. And some notes. So all the other column shows amounts relating to segments that fall below the quantitative threshold. They didn't meet that 10% threshold or the 75% threshold. That's why they are put under all other. Impairment of asset is disclosed as a material non-cash item. Now we have to assess the segmental reporting. So they provide the segmental report. They provide investors with some information. What are those information? One is they are produced from the management's perspective. So through this, investors will know how managers has performed, right? And also they can see how managers view the business. How managers view the business. Through this, investors will know this. Number 2, different parts of the business will have different growth opportunities. Not every segment operates the same way. Some segments, the growth rate is too high. Some does not grow so much. So through that, you will know which one is growing fast and where you need to target. So segmental information may therefore help investors to better predict future performance and future cash flows. So you can predict future performance and future cash flows. Third, geographical disclosures are useful for investors in multinational businesses. MNCs is very useful. They need to know in which sector, which country their businesses are doing well. Because each country and location may face different risk, including political risk and growth rate. So one is geographical disclosure. Now you need to see the case study also. You just cannot say, okay, IFRS it should be applied. You have to see the type of business you are given. If it's a small businesses which are just operating locally, you cannot say geographical disclosure is useful because they're just operating locally. Why would they need this disclosure of geographic locations? It is only for very big businesses. Moreover, segmental reporting requirements are relatively cheap for entities to comply with because the information is already produced for the internal use. Whatever the information is there, it has already been provided or produced for the internal use by the management. So, to make it external, to report it, put it in the annual account, this is not so expensive. Easy. So, the benefit exists the cost. But some limitations are there of IFRS 8. What are they? Trading between segments may distort the results of each operating segment. Yes. Particularly if the transaction do not occur at fair value. Yes. When you do the transactions, trading, selling and buying between the segments, most of the time it might not be at fair value, the transaction. So because of this distort the results. One segment might be earning too much, the other one will be losing, the other one will be profit. The profit will be too high for the other segment. IFRS 8 states that the segment should reflect the way in which the entity is managed. This means the segment's information is not useful for comparing the performance of different entities. Yes, because some entities they might segment using geographical location. Some might go by the product type. Some might go by the class of customer. So it's different. It's hard to compare. And also this is based on management's perspective, the way how they segment. And some users lack trust in management's intention. Yes, they don't have trust in manager's intention. They might think managers are doing this or segmenting the way they are doing because for their own benefit, not for the user's benefit. So what happens? They may attempt to conceal the loss-making areas of the business. They might not want to show that within a larger profitable reportable segment. How do they hide it? Inside the larger profitable reportable segment. When entities over aggregate segments, yes, they might over aggregate. May try to aggregate each and everything, which reduces the level of detailed reported to stakeholders. So the detail missing out. And common cost may be allocated to different segments on whatever basis the directors believe is reasonable. This may lead to arbitrary cost allocation. Okay. So now let us summarize what we went through. How did we go by report? How do we define reportable segment? We see the managerial approach and the 10% threshold on sales, profit and loss, and assets. And how do you disclose the segment information? We disclose general information, information about profit or loss, entity-wide disclosure, measurement, reconciliation. And problem areas are the subjectivity, that how to aggregate, how much to aggregate, how many segments to aggregate, what are the common cost, and inter-segment sales. So these are some 3 common problem areas. Now we are going to do both your test your understanding before I move on to some other standard, so that now you understand IFRS it better, how to apply it in questions. Test your understanding 1. eGames is a UK-based company that sells computer games and hardware. Sales are made through eGames website as well as through high street stores. The products sold online and the stores are the same. eGames sells new releases for 14 in stores but for 30 online. Internal reports used by chief operating decision maker show the results of the online business separately from the stores. However, they will be aggregated together for disclosure in the financial statements. Should the online business and the high street stores be aggregated into a single segment or operating segment disclosure in the operating segment disclosure or separately? So how do you answer this? Okay, so this answer that has been given here in your test understanding 1, this answer you can even use in exam also if they see whether they have to be aggregated or not. So IFRS says that two or more operating segments may be aggregated if they have similar economic characteristics. So we see that the type of product or the nature of the type of customer, the distribution methods, the standard says that they have similar economic characteristics. They would have similar long-term gross margins. So e-game stores and online business is the same type of products. It is just the platform is different, but the product they are selling are same types. Therefore, there is no major difference between the type of customers. Okay, the type of customers that they will get in online versus the stores are mostly similar. Major differences are not there. So in this respect, the segments are similar. Customers will collect their goods from the store, but e-games will deliver the products sold online. This means the distribution methods are different, yes. Moreover, these are different. There are different sale prices. You see, one is selling at 30, one is selling at 40. Between the stores and the online games, giving rise to significant difference. So because they're selling at different, that means there'll be a significant difference in the gross profit margin. This suggests this similarity in terms of economic characteristics. This means that it might be more appropriate to disclose these two segments separately. So you need to answer this. You need to see these three things whenever you need to decide whether to aggregate or not. The nature of products or service, the type of customer, and the distribution methods. The first two are same, but the distribution methods is different. One is selling online, one is selling these two. And also, they are charging different prices, so their gross profit margin might be different. But again, when you're answering such questions, remember there is no right or wrong answer. Some might say, okay, to aggregate. Still, you will get full marks if you can justify. You can say that the nature of the product and services and the type of customer are same, so aggregate it. Now let us go to test understanding 2. According to IFRS, which segments must be reported? 1, 2, 3, 4, 5, 6. So there are 6 segments you have been given. So we'll see. Before this, yes, yes, no, no. Okay, we need to do the 75% test. Europe, Asia, North America are reportable. However, we must check whether they compromise at least 75% of the company's external revenue. So if you go to Europe, what is the external revenue? Only check out the column of external revenue. Okay, the total revenue is made with 140 plus 120, the internal as well as external. So, but when we take the 75% test, that is only on external revenue. Okay, so 140, 33, 150. Okay, sorry, they are not taking 33 because it's very small. They're taking the largest amount, 140, 150 and 195. The 3. So they add the total 485%. Okay. So the external revenue generated by the reportable segment is 79%. You see. Together this 3 gives you 79%. This divided by the total of the total. What is the total external revenue? That is 612. So of the total external revenue, 79% is they have passed the threshold. 75% was, at least it should be 75. Now it is 75, the external revenue. So 75% test is met and no other segments need to be reported. Only these 3 segments needs to be reported. Because if one of the segment is not here, this will not come to 75%. You can try it out. Definitely, how do you decide that only these 3 segments? Because if you see the external revenue, the highest is in North America, the second is Europe, and first is North America, then Asia, then Europe. The others are very small, Middle East, Central America, and South America. So first you see, you can do like this. You can take the first 2 and see. Just the North America and the Asia. If you take this 2 and see whether it exists 75% threshold. If it does not, then take another more. That's Europe. So with this 3, if you're still not getting 75%, you might have to take the next highest, which is South America. So like this, you have to keep on taking until you meet the 75% threshold. Before you apply the 10%, remember, to identify reportable segments, you first have to test the 75%. You first have to pass the 75% threshold before you apply the 10%. because only on reportable segments only you have to apply the 10%. Okay. So in the conclusion, reportable segments are these three. But others you might combine if you're not getting 75%. But here you have got 75%. So you don't have to combine other segments which didn't meet the 75% threshold. Okay. So if now we'll apply the 10%. So 10% of total sales. Both when you're taking 10% total sales, internal and external, 10% of the results, that means profit and loss, and working 3 is 10% of the total assets. So what is the amount of the sales? 10% of 1 million, the total sales. What is the total sales? It is 1 million. So on this you take 10% and see, it is 100,000. All segments whose total sales exit 100,000 are reportable. This is according to the 10% threshold, they are reportable. So if you see here, more than 100, Europe, Asia, and North America, these three. So when you go to here, the 10% revenue, it's yes for Europe, yes for Asia and North America, others are no. When it comes to the profit and loss. Okay, before profit and loss, let us finish the asset. Asset is on 10 million. What is the assets? If you see asset is 10 million. So on assets you take 10%, 1 million. So whoever the segments exit 1 million are reportable. So here if you see, this is more than 1 million, this is more than 1 million, only these two, North America and Europe. So it's yes and yes, others are no. And when it comes to report, whether they have to report or not, only this, this and this according to 75% threshold. And what about the test on profit and loss? So 10% on profit making segment, 10% on loss making segment. You have to add. When you are seeing that loss is only made by two segments, this one and this one, the rest all are profit, 26 and 15. So you add it and add. So this is the percent and this is for profit. Whichever segment is making more than this profit are reportable. Whichever segment are making more than this loss are reportable. So therefore all segments which make a profit or a loss of greater than 27,800, the higher amount you have to see, the loss is higher or the profit. Here the profit is high, 27,800. So whichever segment makes a profit or a loss more than 27,800 are reportable. So if you see here, it is this. Okay, the North America, this amount 27,800. So 27,800. Okay, it is Asia, Europe, this four. So it's yes for Europe, yes for Asia, yes for North America. Middle list is no. Let me again check middle list because it's 26. Okay. Okay. Yes. So that's it. Now if you see, so if you see whatever is reported here, even for 10% total revenue, 10% reserves and 10% assets also, those three are there. Those three segments. Here it will be no. Okay, whichever is not reported, you don't have to report it at all. So that's it for IFRS 8. See you in next standard.